Rohim says, thanks to your awesome program, Sam. Family and friends are really noticing my financial success now. They keep advising me not to rent, but to invest in real estate, like buy a house or buy a house to rent out to somebody else. I only take financial advice from successful people like you. So what would you recommend when it comes to real estate? I would recommend just saving the money and keeping it in cash, seriously, because it, like, I bet you don't have a huge amount of cash in your bank account. And there's, a lot of people think that if you just have even 100 grand in cash in your bank account, that's dumb. You have to have that in an investment or in some real estate or something, which is madness. Like, I would be freaking the hell out if I had a few $1 million in my account. So having money sitting in an account doesn't mean you have to put it into real estate. That's stupid. That makes no sense. Like, you should just keep building up the cash, because cash is very, it's valuable, and it doesn't give you high interest rates, but it also gives you confidence, and it also gives you a lot of options about how to deploy it and all of these different things. Whereas if you tie up that capital in a fixed asset, then there's a high chance the market swings and you're stuck holding a shitty asset that you can't liquidate, and you now are out of cash. And cash is more important than assets. Like, if you've got a lot of assets but no cash, you're worthless. You will be taken out. But if you have a lot of cash and not a huge amount of assets, you can buy everybody else's assets when they put themselves into that stupid position by not holding enough cash. So that's why you should just focus on holding the cash. Like, it's counterintuitive. Most people will tell you, go and put it into real estate and don't have cash in your bank account, but most people don't know what they're doing. And if you want proof of this from someone more successful than me, then look at Warren Buffett, read Berkshire Hathaway's letters to shareholders, look at any major hedge fund, look at anyone really successful and in the investment world, and they do the same thing. A lot of hedge funds, right? A lot of people would think, well, they probably have all of their money invested into different stocks, lots of different stocks. It's not the case. They hold, most of the time, 50% of their total value in cash. So if they've got 100 billion, they'll hold 50 billion in cash, and they'll only have 50 billion invested in positions. And then they don't have 50 billion invested in 200 different stocks or positions. They'll only have 3. So heavy concentration on a small number of things and lots in cash. So that's how you do it. That's the smart way to do it. But what most stupid people do is they have zero cash and all of it invested into all of these different positions. And then when the market moves, which it always does, it's like musical chairs, and they're the ones still standing without a chair. And then they get screwed. And then the people who hold the cash come in and buy all of their assets off them for really cheap prices. And then when the market moves again, those same stupid people come and buy the assets that they sold to that other person off them for a markup. That's how it works. So just don't listen to the common advice and look at what really successful people actually do. Hold a lot of cash, invest in very few things, and concentrate heavily. Diversification is a strategy only deployed by people who don't know what they're doing. So, the theory behind diversification is that you should just put your eggs in multiple baskets, right? But that's only a smart strategy when you have no idea what you're doing. Because if you don't know what you're doing, then you shouldn't really do anything in the first place. But if you are going to do something and you have no idea what you're doing, we're already in dangerous territory. And if we're in this situation, the best thing we should do is spread our money evenly across everything. Because it's like playing, what's that game? Roulette. You know how you can place those chips across the board on all of those different things? That's like a diversification strategy, right? It's putting them across lots of things because you don't know what it's going to hit. And that's diversification. But when you know what it's going to hit, you do not diversify, you concentrate. And so, like, you should, and if you don't know what it's going to hit, you shouldn't even be playing. So hold the cash, don't play, and when you do know what to put the money on, put it heavily on, but still always hold at least half in cash. That's how you play. Chris says, curious, what are your thoughts on buying versus leasing, houses, cars, etc.? So I think that you should, if you're an employee and you plan to always be an employee, and then you should probably like buy a house, like, because it's a decent investment vehicle for an employee. But if you're an entrepreneur, then you probably shouldn't buy a house, because you're going to have a lot of different investments available to you that will produce a way better yield than a house. And also you have a massive need to have more liquid assets than a house. And so for entrepreneurs, I don't think you should buy a house. The only time I would buy a house is if I lived in a zone where it made more sense to get a mortgage than to rent. Because basically the only time that would be true is if the mortgage was equal to or less than the rent, then I would buy. And so what typically happens is that I like to live in nicer places, like nicer houses and things, in general quite popular locations. And what happens then is if you're in a popular location in a nicer house, the price is just stupid. Like it's like $5 million or something. And I don't want to pay $5 million for a house. That's stupid, because the market for a $5 million house isn't very big. And also it's very volatile. The luxury housing market is not where you want to be. Like, it's better to buy the things where there's lots of movement, which is like in between 500 grand and $1 million. That's a good place to buy and sell, but it's not I don't want to own one of those houses. I don't want to live in one of those houses. I want to live in a nicer one. So just given all of those variables that I just told you here, it makes no sense financially to buy. If I rent, it's cheap, and I can be in a place that's nice, and I get to expense it too. And then I invest my money through my company, because it makes way more than a real estate transaction.